Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Thursday, January 17th, 2013. Well, a continuation of the trend to the upside today, and the candle has made a higher high and a higher low. A very large white body candle, and substantially different to the previous four trading periods. Previous four trading periods where we had a downtrend in place. We had very small body candles. The market was attempting to retrace this solid second time frame uptrend that the market's been in. It really didn't do it in a serious way, and as I mentioned previously, it really said something about the lack of commitment from the sellers. If we look at the past four candles in succession, we have small bodies at the top and very large shadows on the bottom, and for those 4 days the market failed to close down below the 1470 level of previous resistance, which was acting as support. We saw the sellers continuously lose commitment down around that area, and it said something about the potential strength of the buyers. And as mentioned, we were waiting for this breakout, and especially breakout up above this previous important swing high around this 1474 level, and today we've seen that happen in a fairly bullish manner. A very nice large size to the body of this candle, and that denotes the buyers making a substantial amount of net bullish progress on the day between the open and the close. The bulls have lost some commitment if we look at this shadow on the top of this candle. So the buyers did lose some commitment when they were trading up around the high, around 1485, but the buyers have still closed with control of this market. It's a moderate amount of control. It is between the midpoint level and the high, but the short-term dynamics here certainly are favouring the buyers, and there is potential for this market to test up to the round number 1500. Now, if the market does test up to that level, it will provide some fairly strong resistance, because the round numbers do tend to do so here. If we just look back at the recent past, where the round number 1400 provided support, so if we do continue this trend, we do need to watch that area. If the market can break out of that 1500 level in a bullish manner, then 1523 is a very realistic target within the next week or two. The market also has very strong support down below, and obviously this previous resistance at this swing high around this 1474 level has potential to hold as support, and this support level where we saw the market find buying coming in for the previous 4 days prior to today will be very, very strong support, as will the area just below there, because we have the Tenkan-sen trading just below there, and that will hold as strong support. Now, very often when we have a market that has high short-term momentum, the Tenkan-sen is the first place to find support, and that's what happened 2 days prior to today, where the market tested down to that level and bounced off there. So look to the Tenkan-sen here. If we do see this market come off, it will provide strong support, and we can see this high momentum in this indicator because it's pointing up fairly sharply, and the Kijun-sen is now pointing up sharply as well. It's pointing up at a fairly steep angle after having been flat and attempting to attract price action back towards it. Now moving to the Fibonacci extension, and we're examining the relationship of the current first time frame uptrend to the previous time the market was trending up, and here we see the market testing exactly to the 100% level at 1484 and being rejected from there. So that does suggest that there is a possibility of a change of trend. Now, we don't see a lot of weakness in this current candle, so that does limit the probability that there will be a change of trend to the downside, but the fairly decent price rejection that we've seen does raise a small amount of doubt about whether this trend will continue, based on the fact that the market tested to the 100% and it was rejected from there. But if we look to the Fibonacci retracement, we're in an expansion mode of that. We've traded through the 100% level for today's trading, up through the 161.8% level, an important level, and tested up fairly close to the 261.8% level, but not exactly to it. There is a possibility the market could test it there. If we do see the market trading to there tomorrow, and the sellers attempting to take control, or the buyers losing commitment and the buyers losing control of the market, then that may set the market up for a potential change of trend. So that is the next important level to watch, 1487. But if the market does trade up through there in a bullish manner, here we have the 423.6% level at 1501, coinciding with that round number resistance at 1500. In terms of Ichimoku, obviously we have a bullish market in all three time frames. The market's trading up above the cloud, above the Kijun Sen and the Tenkan Sen. So we're bullish in the medium term and the fast term time frames, and the Chikou span is above the corresponding price action. So it's confirming the bullishness that we're seeing in all three time frames. Previously we saw the market in this congestion mode attempting to retrace back towards the Kijun Sen. We were waiting for a breakout, and that's because the market was bullish in all three time frames. So a good buy signal there, and a good likelihood of the market testing up to around the 1500 level. But this market is starting to look a little bit overextended in long-term time frame. We are a long way away from the cloud, and if the market doesn't come back within the next week or so, then the cloud will actually move up to meet the market, as we can see here. So if we see the market testing up to higher levels and perhaps congesting around this 1500 level and a minor pullback, and we will see some natural support in the future, but not at the moment. The Tenkan Sen is very closely following the market, so in the short-term time frame we have some very strong support close to this market, and some very strong momentum in that short-term time frame. But the Kijun Sen is a fair way away from the where the market's trading at the moment too, and if we do trade up to the 1500 level, that distance could be compounded, but the further we move away from that Kijun Sen and all of the Ichimoku indicators, the more likelihood that we will retrace back towards it, because they actually represent equilibrium in their various time frames, and the markets move between disequilibrium, which is this type of trending action that we're seeing, and then equilibrium when they actually revert back towards the mean as described by these Ichimoku indicators. So for tomorrow, a bullish breakout up above the resistance that we were looking for over the previous few days. The market is looking very bullish in terms of Ichimoku. We have seen the sellers lose some commitment, the buyers lose some commitment around the high, but the buyers are still in control. The likelihood is that the market will continue trending up and test up to around the 1500 level, but if the market does come off, we have very, very strong support just below where the market's trading at the moment.